Oil prices are surging, and now Iran has vowed to attack any ship that tries to pass through the Strait of Hormuz. This comes after a massive U.S.-Israeli airstrike on Iran over the weekend, and now oil is sitting loaded on tankers in the Persian Gulf with nowhere to go. The longer ships can't transit the narrow waterway, the bigger the impact on oil prices.
The oil market is most focused on the supply disruption risk, and we are already seeing significant challenges in moving oil and natural gas through the all-important Strait of Hormuz, the most important choke point for energy in the world.
About 20% of the world's global oil consumption comes from oil exports that pass through the Strait of Hormuz. So the Persian Gulf is basically like a cul-de-sac. There's really only one way in or out in terms of water transport. Wall Street banks like JP Morgan, Bank of America, Barclays, Deutsche Bank, they've all said that if there's a prolonged closure of the Strait of Hormuz, we could see global benchmark Brent oil prices shooting above $100 a barrel, which, would have significant implications for the global economy. In 2025, more than 14 million barrels of crude per day were passing through the Strait of Hormuz. 3/4 of those exports went to 4 major Asian economies. Those were China, India, Japan, and South Korea. So China is heavily dependent on exports from the Middle East. Middle East oil represented approximately half of China's crude imports. So, the Middle East is obviously very important for China in terms of energy.
17% of China's oil is coming from Iran and Venezuela combined, and I think the president's trying to get a very similar setup with Iran as he did with Venezuela. But if you start getting control of that oil and you start making it more difficult for China, then it becomes a lot harder for China to move on Taiwan down the road at some point overall. And so instead of going after China directly, you want to go after their proxies. Trump is now saying, okay, I'll go after your proxies rather than you directly, and I'm going to raise the cost of you doing your global adventurism, and I'm going to lower the cost of us. And that's why all roads lead to China at the end of the day.
China is such an important part of the story, and Asia in general, because if you look at the destination for the energy that's moving through the Strait of Hormuz, Asia is a key destination. In fact, the United States is not in any way the major purchaser of the barrels and volumes that are coming through that waterway. And so the interesting question is, do we see China become involved in an effort to off-ramp this conflict? What I think is important to remember, though, is China has been aggressively buying all commodities for its strategic reserves. And the question is, were they doing so in anticipation of some type of supply outage stemming from a conflict in the Middle East?
With President Trump and Chinese President Xi expected to meet at the end of March, energy security could become a bigger part of the conversation. China has been building up strategic commodity reserves, potentially giving it a buffer against short-term oil supply disruptions.
If we have a little high oil prices for a little while, but as soon as this ends, those prices are going to drop, I believe, lower than even before.
But oil is only part of the story. This conflict is also hitting global natural gas supplies. Qatar is the world's second largest LNG exporter behind the U.S., and their production is now offline after an Iranian drone strike.
The Qatar Defense Ministry said that 2 drones were launched from Iran that hit 2 facilities in Qatar. Qatar subsequently said that those facilities were LNG facilities. So today, Qatar announced that it's closed liquid natural gas production due to the security situation. It's unclear how long that will last, but that matters because about 20% of the world's global liquefied natural gas exports come from the Gulf states, primarily from Qatar.
I would say that oil is no longer a leading indicator of the risk building in this system. It is a lagging indicator. And so the question is, in an extended conflict scenario, will we see cascading supply outages out of the Middle East? That is a pathway to a substantially higher oil price than we are at now.